Regional and community banks, they're important to our financial system, and the United States has more of them than anyone else.
I think the regional banks are very important, extremely important. You know, we have 4,500 banks, which is a lot more than any other country per capita or per dollar of GDP.
As important as they are, regional banks have come under pressure in recent days. First, we had the effects of a dramatic rise in interest rates, leading to the closure of Silicon Valley Bank, Signature Bank, and First Republic Bank.
It's the breaking news late Sunday. The Treasury Department, the Federal Reserve and the FDIC said it will wind down Silicon Valley Bank in a way that, quote Tom, fully protects all depositors. We know the one question everyone was asking themselves over the weekend: where do we bank and do we need to open a new account?
Then came the decline in commercial real estate values, which hit regional banks particularly hard.
Commercial real estate is not a principal risk or a major risk for the very largest banks. It is much more for regional and really the smaller banks have proportionally a much larger exposure to real estate.
And now we have new capital requirements proposed by the Federal Reserve, which would extend to regional banks not covered before, and that bankers say will curtail lending.
We have, the examinations we have on capital, they do impact our ability to drive competition in the market and help America's businesses grow, expand around the world, grow domestically. And on a level playing field, there's a critical issue here, is that if these rules go through, the U.S. banking system went from being here relative to the European banking capitalization or other countries to here.
Raising questions about the price we'll pay for higher capital requirements.
Raising capital requirements by as much as 20% on an industry that all participants believe is well capitalized is a bad idea in any environment. But it becomes even more problematic with economic uncertainty ahead.
And whether the benefits are worth that price.
I think capital requirements need to be somewhat higher. Now, having said that, I think it's incumbent on the banking agencies to dig into those analyses of optimal capital levels, the trade-off between financial stability and economic growth, and to explain in a way that's accessible not just to experts but to the public why these capital increases are warranted.